Guys, a quick crypto update about yesterday. Complete disaster. We'll go through the level 2 data together using the order books. I shared this again yesterday. I also showed in the previous video that we still have a large order cluster down here, but the level 2 data also showed yesterday that we dipped right into this area. That was the reason why I really bought spot Bitcoin right at the bottom here, or almost at the bottom. This is the minute chart. I've currently realized 0.1 Bitcoin for myself. We also currently have, let's not forget, massive CME gaps. On Friday, at the close of the US stock market, we had a final price of $84,565 for Bitcoin and $2,712 for Ethereum. That means there is a 10% and a 7.26% difference respectively between the current price and the CME gap. Is that it already? Yes, we need to take a closer look because the Fibonacci retracement and Fibonacci extension levels need to be examined more closely now since we've just reached the target levels after this structural break. The first target level is 1.618 at the same time as the $230 million cluster, which was indicated by the level 2 data. Right here, this is where institutions and whales have placed their long orders. At the same time, this is also the order block here, meaning our last low after the previous major correction we had. That's where the price is currently at. Will this hold or are we actually going to see a new low? Of course, we need to analyze that and we will go through it in detail. Additionally, I want to show you that we are also looking at Ethereum here. There was a whale, meaning a big trader. Yesterday, he had to realize a loss of $190 million. We've already talked about this Ethereum trader, Hugo from Smart Money Crypto. He's actually the one who brought it to my attention because I only knew this trader's liquidation price. I showed you that in my videos with the Coincast Legends. That down here with Ethereum, there is a trader who has an incredibly large liquidation amount and apparently he was targeted. What do we see? $2,224 was the price at which the position was closed and 98,537 Ethereum were liquidated. That's a huge amount and of course the total loss is incredibly painful. And if you ask me, was that a targeted attack? Because if I go back now and we take a quick look at Ethereum, where did the price go? It dropped to just about $2,220. If we look more closely, maybe even a bit lower, around 2,207 roughly. So it really does look like it was a targeted attack so that this trader would lose nearly $200 million. And he was trading cross and got liquidated because all his other positions were so deep in the red that his liquidation price, which was normally at around 2,100 and a bit, apparently increased to 2,224. Exactly. Otherwise, I've already looked at the next liquidation levels. We've already covered that in the signal group. Coin MBOTs are active again. Yesterday, I caught a great entry here. This first coin MBOT, which is supposed to increase its Ethereum, is now about 1% in profit. So already 1% more Ethereum than at the start. But these are long-term bots that are really meant to accumulate more Ethereum until Ethereum eventually reaches $4,000 again. And the second one, which we've just started, and a third one is still waiting. But let's move on and take a closer look at this in detail. Bitcoin. At the moment, will we see even lower prices here, or was that really it now that we've dipped in? And I'd like to share one more thing with you. Of course, I hope that this holds, but if I simply use my Fibonacci retracement or extension here, as I told you, if we look at this long term, that was our bottom around $3,800, and that was also the reason. And today I'm honestly more than happy that I sold my Bitcoins bit by bit. So I sold about 30 to 35% of my holdings, maybe even a little more. I sold once here and once here, and here as well. Right now, I'm very happy about it. Back then, I wasn't so sure. Of course, I had a bit of a bad feeling in my gut and thought, is it really a good idea to do this? What if we go up? Today, of course, I see things differently. But here too, we reached the Fibonacci extension level, and that was also the reason for my sales. And yesterday, we reached another extension level again for this other structural break. But if we now go in and say, okay, this is our upward structure, our long-term upward structure from the second to last bear market to the last bull market, then back to a bear market and then again a bull market, we would now have the opportunity to apply the Fibonacci retracement here once more from the bear market up to the bull market. And then there could be a price that becomes very, very interesting for the target levels. And I have to be completely honest with you about that. We'll see later when we look at the liquidation heat map that this will become interesting. The next truly valid level, if we go below the 1.809 or perhaps even move into the 2.0 Fibonacci extension level, would then be at the 0.5 support zone at $70,577, which at the same time were the previous highs here before we then made the new all-time highs. If we really go down that far, I don't want to predict it, But there's a probability where I would say if that happens, I would start buying a bit here again and also begin to build long positions, even if only for the short term. Because at the moment, we must not forget we have a CME gap, and you can see it visualized here again when I turn on the indicator. That's where our CME gap is. Now, of course, the question for me is, can we apply the Fibonacci retracement level here again? Because in fact, we haven't reached it again since this high. The question is this our low? Are we actually going to go back down to around 86,000 again? For that, we need to look into the liquidation heat map. And there we have a huge cluster at 91,000 US dollars on a 2-week basis. And now here at the CME gap, 84,800. And I think that's going to be very interesting. This large cluster that we see here now, together with our CME gap that I just showed, is in alignment. Accordingly, I can easily imagine that the exchanges will trigger liquidations, close the CME gap, and then we'll see what happens next. If this major Fibonacci retracement level doesn't hold, then for me, if the current low really does remain the low, I'll be looking for my next entry in this area, because we have here. And that's what I'm showing again right now. If we close the gap, which would be in this area here, at the current time we would be heading towards a bearish 0.618. In that case, I don't think we'll reject the 0.5 yet, especially if we have the CME gap directly above us. I have to be completely honest about that. Because for us to rise that high without closing the CME gap would be rather unlikely in my view. Of course, it can happen, but the 0.618 Fibonacci would definitely be interesting together with the CME gap. 84,800, where did we have the liquidation? 84,816. So a very, very interesting alignment, yes, when it comes to the CME gap and the Fibonacci retracement level for a possible short position that we could enter here. I will prepare for that. I wouldn't be too bullish right now. Of course, we could keep going up, but right now we have a bearish trend continuation. We've actually broken through all the lows that we've been holding for a while now, and we've done so quite strongly to the downside. Another rejection. Maybe we'll grab something down below again before higher prices are possible. At the moment, though, everything looks more like we're going to keep heading down. Because what is also coming our way, and I mentioned the level 2 data earlier, is 230 million US dollars in longs here. And that's something I really don't like at the moment. Yes, let's remember the 84,800 or so. And let's go back to the level 2 data. You can already see here that at a price of up to 84,000, we have an incredible amount of new order volume. Similar to what we had here. So what kind of selling volume is waiting for us up here again? Unfortunately, it already starts at 80,000. But let's take this large cluster here, and there's quite a bit again where people are now ready to push the price down. And at this point, from 81,000 to 84,200. We could even go a bit higher because the cluster is a bit further up. That would be in here in this case. That's where the CME gap is closed, and we're at around 170 in short positions on Binance. But we mustn't forget that's only Binance. Plus there's almost 15 million more being sold off here on spot. Current point in time. With the market opening, when the traditional markets are open again, that could of course be very significant, and we might see more coming in here. Down to 80,000, and I don't like that. We're already at 222 million US dollars placed in shorts here. We need to keep monitoring this. If we look at the liquidation heat map for Bitcoin on a long-term yearly basis, Model 3, since it gives us much deeper insight, we see that the next larger clusters currently waiting for liquidation are at around 72,800 and 70,000 US dollars. Let's see where that is. 70,000 US dollars, 75, 77 would be exactly this 0.5 Fibonacci level I mentioned here. And that would be a very, very interesting price range where we might have a short-term local bottom. We'll see if it really comes to that, and we then rise. Because if we look at the past, after these bigger sell-offs, after we broke out of this flag, which was very similar to now, there wasn't a massive rally anymore. And of course, that's not what we want to hope for now. And we also have completely different institutions involved now. We also have to keep an eye on that. MicroStrategy, of course, is currently completely underwater. That's not so nice. I'm also curious to see how things will continue for them and what kind of news will come out. Moving on to Ethereum. Ethereum is getting really exciting at the moment. Ethereum actually had this large price range, this long consolidation phase that we saw from May 2025 to July 2025 before it broke out here. Now we've entered that range, and with Ethereum, even with Model 3, we've had insight into the liquidation heat map for a very long time, which showed us there's a very, very large cluster here. And this is where, and I want to show you this again, Model 3 indicated this, 25 billion, then another almost 25 billion, 18 billion. So very, very large unliquidated clusters, all of which have been fished out. And the next one is actually around 2,062 down to 1,992 US dollars. And you can also see here 18 billion, 32 billion, 26 billion, 7 billion. At 2,000 and 2,100 US dollars, I already have Ethereum coin M long orders waiting. There, I'm going in with 10 Ethereum long, 1 times leverage. So I actually have a liquidation price here at around 1,000 US dollars. And if we fall further, I will increase this position. But the cluster is very, very interesting because further down, we must not forget at 1,500 US dollars, there are also 20 billion, then another 13 billion and 11 billion, just in case it goes that far. I'm preparing myself. I don't want to say, yes, we're definitely going there 100%. I'm preparing myself and want to take advantage of opportunities when I see that we have such liquidations. But if I also take a look, we can now also briefly look at the level 2 data for Ethereum, which is incredibly important and gives us insight into the institutions again. Where are the orders there? And take a look here too. We see that right before this dump, new players positioned themselves here, coming in again with new orders. These are interesting zones that are really exciting. And what do we see now? Where have they positioned themselves now? Man, you can hardly believe it. This has only been the case for a short time. Where did I just say the liquidations are? 2,100 down to just under 2,000. In this case, also 2,100. People have already placed themselves with 150 million in long positions just on Binance. We're only talking about Binance here. That's really a lot. Let's go a bit further down so we cover the 2,000 US dollar mark. That would be exactly this area here. There we have 228 million US dollars just waiting here in long positions, right where this liquidation is happening at the same time. And that's why my tip for you, use these level 2 data on CoinGlass. You have free access to it. Check out my video. I've made tutorials about it. Go ahead and subscribe if you like. I would really appreciate it, especially if you want neutral trading analyses. And also if you're interested in passive income with trading bots. If I don't forget, I'll show you my DCA bots at the end so you can see how they're doing right now. They've made some good purchases. That's something that's really, really exciting. But learning trading step by step to become a pro trader, if you take a look at this, I can tell you 99% don't use it. With this tool, you're ahead of 99% of traders. Institutions use it. And in fact, institutions work with level 2 data. It's also easy to see where liquidations are happening, but also where other people are starting to build up their long orders. And we even have insight into where they're placing them. And often it's the case that when we go in here just before this point in market, and we saw the same thing again with Bitcoin. At the beginning, and I want to show this again, in this area here, they suddenly placed an incredible number of new positions. Very, very short term. I shared that with you. A lot more went in at that point. Before that, there were a bit fewer, but then they really added more here as the price went down, and you can analyze all of this live here. You can see 416 million, 237 million, and then a few spot purchases that came in here. But especially the perpetual, that is the futures positions, are super interesting when you can experience them live or even get insight in advance. Where could the local bottom be? And with the spot purchase here, for example, I caught it very well. Yes, the only thing I still see now, maybe to wrap up, the daily chart for Bitcoin. If we go in and watch the RSI is actually already at a very strong low. And if we look at the RSI, we can still see that now. We have often had lower areas, but overall, these have almost always been local bottoms. If we take a look, the price has usually always risen again afterwards. Also here, normally, even if we should continue to go down now, what could we see? As a small example, this could become a daily bullish divergence because we had something similar here. The price was very far down. We rose briefly and then even went down further again. But the RSI formed a higher low while the price formed a lower low and we went up. And we saw this at regular intervals exactly in the same pattern. Here too, we built up a brutally large divergence, also here on the daily chart. The RSI, a higher low, the price, a lower low, and afterwards there was an increase. Let's hope that this recovery happens. CME gap. Yes, I have to be honest with you about the order volume. When it comes to Bitcoin, I still find it very alarming that there's so much above us. Hopefully that won't happen. That it's exactly at the CME gap and also at the Fibonacci level, that doesn't really please me at the moment. But we have to accept it. But maybe use the opportunity for new trades. With that, I'll say until next time. Ciao, ciao.